Hey everybody, this is Jose Blasco. We are about to start. Let's use these few seconds for a sound check. Please go ahead in the chat box, confirm that you hear my voice, so I know we are ready. Thank you so much. Okay, so we just got to the top of the hour. Very good. I can see sound is good, sound is correct. So we are ready to start. Very good. Hello everyone and welcome to the session today. My name is Jose Blasco. I will be your guide. Today is 11th of December 2019 and today we are getting together for longer term trading purposes. So we'll be looking at the markets, we'll be planning on swing trades, we'll be utilizing options, I would guess in the majority of the cases. And we'll be exploiting two basic type of trades, which are the directional trades, long and short, and also the non-directional trades in order to collect credits from the options markets and make money in a more passive manner, if you wish. Anyway, before we start, we have a disclaimer. So I'll read that and we begin the session. And again, I'd like to ask for a second confirmation for a sound check, guys. I'd like to reconfirm that sound is correct. I think so, but just to have a final confirmation, that would be great if you could type a quick message on the chat box to confirm that sound is okay. And I was saying that before we start, we need to go over a disclaimer. So I will just read it very quickly and we begin. The following videos, clips, demonstrations are for educational and instructional purposes only. Traditive provide these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive when using all products. And this is the disclaimer. And therefore, the session is now officially introduced and we are ready to begin. We have our TradeStation ready. And we are ready to begin planning and doing all our analysis with TradeStation. As always, the beginning part of the session begins by looking at the scanner, where we have been clicking on the run button and obviously executing some scans. And out of executing those particular scans, we concluded a series of opportunities. We identified a series of opportunities where some of them fall into what we call debit trades, or another way to think about it is directional trades, long and short. So trades that would make money if the market goes up, trades that would make money if the market was to fall. We'll certainly look into those and plan specifically entries and exits for those trades with a corresponding options play. And also in the bottom part, we have a collection of credit opportunities where normally the ones we like to execute the most are the ones on the top, the ones with the ND that stands for non-directional. Because below we have, as you can see, neutral long, neutral short, which are certainly other options available that could make sense at times, but normally we get more credit doing pure non-directional trades, and therefore this is where we normally begin. Okay, so let's begin talking about beginning. 27 minutes from now, the US market will open trading to the public. Apart from that, apart from that, we will also have a reset of the option chain in 17 minutes. In other words, 10 minutes prior to the market open, typically option chain reset, and therefore we'll have no data in the option chain, meaning that we will not be able to do any planning for the options. So what we're gonna do is devote these 17 minutes looking for non-directional trades, okay, and see how far we can get. And once we get 10 minutes prior to the open, then we'll stop looking at non-directional, we'll stop that, and we'll focus on the directional trades, because planning trades implies more work on the charts, okay, and we can use those 10 minutes prior to the open to do that, meaning that when the market reopens, then we are ready to complete everything directional and non-directional, okay? So let's begin with the non-directional list, okay? And if I click on it, we got a collection of symbols, okay? And I'm gonna start looking at symbols that out of market experience, I understand they have an okay liquidity, but also looking for symbols of a, let's call it a higher price point, meaning $100 or above, it's kind of where we like to start, because the higher the premium, the higher the price of the stock, normally, not always, but normally, the greater the quantity of premium received when selling options. There are many other factors that impact the prices of the options, as you probably know, and if you don't, make sure you watch the sharpening sessions that we did where we talk about that. But certainly it's a good thing to have a starting point of a stock which is not low price but actually high price. Okay, and just to call it something, we'll draw the line at $100 per share. Okay, so I am loading the option chain. I want to bring as well Yahoo Finance into our screen. Here we go, because of course I am always concerned, we should always be concerned and wonder, why is it that those stocks got so much premium built in? Is it because earnings is close by? Okay, and if that was to be the case, then that would be certainly a problematic situation. Okay, so I need to check on that. And by the way, guys, if you don't mind, let me recheck, because it seems that I'm not getting the chat working correctly on my end. So just give me, oh yes, now I see it. I believe I see it now. Okay, just 1 second, guys. I just need to make sure all is good. Okay, yes, okay, perfect. Yeah, so something happened, I guess. Something happened, I guess, and now I get to see the chat. Earlier I was not able to see the chat, so apologize for that, but now I feel much better. Since I was feeling it strange not to get any feedback from you guys, and I guess I got a little technical problem on my end. Okay, but it's all good. I see you now, so it's all good. So again, looking at UNP, okay, looking at UNP, UNP is a stock that is going to be reporting earnings on January 22nd. So January 22nd, certainly it's a very interesting date, because if you were to look at the schedule, okay, let me open it here. So if you were to look at a calendar, I should say, okay, here we go, and we look at the current date, which is December 11, and you think about January plus, as we just saw, well, we are talking about the fact that we could be using February 13 expiration date for our options trades. We could be using December 20, December 27, then January 3rd. So there are multiple Friday expirations that we can use prior to that January 22nd expiration date, and that's certainly a good beginning. Okay, we certainly like that. Okay, so that's good to know, because it allows us to use multiple expiration dates. But having said all of that, the data we have on our screen right now, it's not encouraging for a non-directional trade, because we never go for below 48%, and 47.5 being very close. Again, we don't want to be that flexible, because in the end we're talking about probabilities here. So I'm going to switch from pre-post market data to regular session, to see regular session data provides me with better quality UFOs, and the reality is that it's not the case. In other words, the AutoUFOs app is revealing that behind the scenes, whoever large market players are trading UNP, they tend to cancel their orders if they don't get filled quickly, and therefore many of those UFOs that are expected to have unfilled orders, guess what? They end up being canceled. Hence the low value, and therefore we are not going to be using UNP for this type of trade, because obviously we would start as a disadvantage. Okay, so we're going to continue here. I got Pepsi. Okay, I got Pepsi, which is over $100 per share, but if that's okay, I'm going to skip it. Okay, and the reason I mentioned that in prior sessions as well, talking about Coca-Cola, we have, I can see here, we have McDonald's too. McDonald's may be a little spicier, so let's take a look at McDonald's. I'll load the chart, but my point is that normally those stocks that are so stable, companies that have been in the market for a long time, companies that sell products that no matter if the economy is good or bad, they will continue selling those products. So, normally those stocks got less premium built in the options, okay? And many times, unless your UFOs are quite close, you end up planning your trade just to realize you don't get premium enough to justify the trade. Okay, so Pepsi, I'm gonna skip it. Okay, McDonald's, normally I've seen better results with McDonald's throughout the time, and maybe you look at Pepsi and it works. Okay, but again, in order to save time, I'm just gonna skip it. Notice how McDonald's is providing us with earnings dates or earning report to be reported public on the 28th of January. So same as before, we got plenty of data in front of us to do a trade. And here we do have 55%, which is above 48, and that is good. Now the question is, what if I switch to pre and post market? How would that look like? It looks as 57%, which is even better. Okay, so this is the chart that we're gonna use. And this is the moment where now we're gonna begin with planning on the options play to make money non-directionally, which in this case is gonna be putting together an iron condor. So I'm gonna shoot for December 20. And as I always say, I'm just gonna right click anywhere to analyze and sell an iron condor. And when TradeStation brings me to the analysis tab, I just wanna make sure that the only thing I got there is the iron condor, and I can see my +1 standard deviation, -1 standard deviation, which are the statistical upper and bottom ranges of what could happen, should happen based on probabilities from now until December 20. This math is done thanks to OptionStation Pro, which is nice. Okay, it saves us a lot of time and adds objectivity. So 263, 190.5. Well, if I go back to the chart and I was to draw a line there, 100.5 is somewhere here, more or less here. And the other one was, what was it again? 200.5, I think, right? Yes, 200.6. So 200.6, it's more or less somewhere around here, okay? So in other words, statistics suggest that price will remain between the two purple lines from now until December 20. So I'm happy relying on that information. But what I would like to do is I would like to focus on this upper part of this UFO right here, okay? That one right here, because getting to 202.10 would imply not only to surpass what probability suggests, which is unlikely because it's probabilities, but on top of that, you would have not only one, but two UFOs to defend yourself in a way where every time the price moves up, those UFOs would tend to bring it back down. At least we have 57% probability for this to happen. Okay, so we are kind of using those UFOs as a tool to slow down the movement of price, both in the up direction and also the down direction. As you can see, I just moved the purple line below the green UFO. So in other words, I would like to be selling options above 202, and I would like to be selling options below 189, something like that. So let's look at the call side first, okay, using December 20, and see if I sell 202, which I got 202.5, how much I get paid. And notice it seems that I get paid 12 cents. Unfortunately, I'm not so surprised about it. I just said before that stocks such as McDonald's, I mean, there are times they may give you opportunities, but these very quiet companies often also provide quiet options. Not sure that term makes sense, but I guess you got me. So I am bringing into the main screen, out of a reminder, some of the rules that we use, okay? And in this case, I want to go back to what are the rules that we have when it comes to accepting selling options, okay? And the rule that we have is that we always go for 35 cents. There may be cases where we make an exception and we go for 25, but in this case, you need to notice that we only receive 12, and that is certainly not acceptable. It's too little premium. So how do we fix that? Well, instead of December 20, we can go ahead and explore what happens with December 27. For sure, we're gonna get paid more. In this case, it seems that we get 26. Now, for sure, we also have more days, and therefore, when I change the date from December 20 to December 27, my upper and bottom range, which currently are 200.6 and 190.48, that upper and bottom range is gonna change. Okay, so I'm just gonna click on it, 3, 2, and 1. Here we go, and now this just became 201.61 and 189.5. So the question is my extreme part of the UFO still located beyond 189.5 and 201.61? The answer is yes, because 202 is above 201.60 and 188.6 is below 189.5. Okay, therefore this would still be a valid setup, and therefore I am going to continue exploring if this trade makes sense or doesn't make sense, because there are now a few more parameters to be explored. Now that we know that at least we get 26 cents for that option, actually we're gonna get a little more, because if you notice, the market will open slightly higher, and that will provide a little bit of premium. Okay, so we're gonna be buying calls above and selling calls below the calls we buy. The one we selected was 202.5. Okay, so that one is already selected. For now, we are looking at December 27, 2019 expiration date, knowing that earnings are happening in Jan 2020, so we're gonna be out before that. Okay, and by the way, remember, earnings dates may change, so you always need to be on top of it to make sure you don't get in trouble. And then on the bottom part, we're gonna be selling puts. Okay, we're gonna be selling puts, and we're gonna be buying puts below the puts we sell. So I would like to see what is above 202 and what is below 188. Okay, 188.6. And in order to do that, I need to go check my option chain. And above 202, we got 205. Okay, got it. And below 188, we got 187.5 that pay us 42. So this is gonna be very tight. Okay, this is gonna be very tight, because remember, we said earlier with the rule that what we like to do, what we're shooting for, it's to collect 35 cents for the options that we sell. I also said that sometimes we'll make exceptions and we'll go for 25. Okay. Now, when do we do that? Well, we do that when we collect more than 35 in one of the sides. In this case, it's 42. It's more than 35. So then on the other side, I am willing to collect, less than 35. In this case, it would be 26, as you can see right here. Okay. So 35 and 26, how much is that? It's 61. Okay. Where if I was to collect 35 times 2, well, it's easy math, that would be 70. In other words, I get 61, but I don't get 70. Okay, so I'm not convinced that this trade will work out well once the market opens. Just in case, I'm gonna have it ready, and we will review everything when the market opens, because of course, all those values will start updating, and we may get a little extra premium, and the trade may work. But at this moment in time, it doesn't seem that we would collect enough premium. So we may have to consider going for a longer expiration date. But again, in the meantime, that's what we got. Okay, so I'm just gonna leave it here on the screen. Okay, make a note for myself where when the market opens, I'll go check on McDonald's to confirm if this trade makes sense or not. It's borderline. At the moment, we get paid 61. We need at least 70. So at this moment in time, it actually is not borderline. At this moment in time, it doesn't meet our rules. But again, since the market is going to move up, we may get paid a little more from the call side. And then that's why I'm saying it's borderline. It may work then. We've seen that before, isn't it? So we'll check later on. Okay. In the meantime, let's keep going. I got 2 more minutes. Okay. So MasterCard, that stock normally is not the best when it comes to liquidity. Okay. So I'd like to look at HON. So let's take a look at HON. HON. Okay, so earnings on HON are happening on January 30. Oh yes, I just sorted it backwards. But anyway, January 30 is the earning date. So that's good. We got 46%. With pre and post market. Switching to regular session, what do we get? We got 51, so that is good. Okay, we do have a proper situation here with the UFOs and so on. I do have a concern here. Okay, and therefore, if that's okay, I'm gonna skip this trade. The concern is that if you were to calculate the vertical distance between the upper part of this UFO and the bottom part of that UFO, well, clearly we are way closer to the bottom part of the range compared to the top part of the range. And what I would like to do is to start those trades somewhere in the middle. I am not in the middle now, and that stock is moving up, but I would really need it to move way higher. So I will double check Honeywell later when the market opens to see if it's really pushing hard to the upside, and then we may have a trade. But right now we are just a little too far from the mathematical middle point of that range. Okay, so FedEx, we got 46%. That's not good enough. We need at least 48 for non-directional. Pre and post market, we got 49. That would work. We got UFOs above and below. That would work. So let's see if I still on time to load the option chain on FedEx, FDX. And not sure if it still is already zero out or not. It doesn't seem it's zero out. Okay, it seems that we still have the data. That's a lot of premium. What expiration date am I looking at here? $5 for the anemone strike. There is a lot of premium built in here on the 58. Oh, you know what? I didn't check the earning dates. Maybe that's what it is, and then that would be a problem actually. So let's take a look. December 18. Okay, yeah, that's a problem. The problem is that December 18 will happen prior to December 20, and then that would not work. Okay, so what we'll do is that we'll look at December 13. Okay, we'll do that because let me see if I'm still on time to doing a simulation here. So December 13, it's suggesting a range between 161 and 153. And I was looking at the chart earlier, and we do have UFOs quite close. So let's see if they are close enough. Okay, so we said the top part is 161.40. Okay, 161.40 is somewhere here. Okay, so yes, we could use that red UFO as an extreme. And if we were to look at the bottom part, 153.46. So 153.46, it's falling somewhere here. So then in this case, we will need to use that UFO right there. So I have the opposite concern I had earlier. If you notice, FedEx is likely going to open a little higher. And what I would want to see with FedEx is that it opens a little lower, okay, somewhere here. So it's kind of in the midpoint of the range, but opening higher is going to be in the upper part. And if that's the case, well, actually it's going to be here. And in that case, we may be just a little too high. So I'm going to check FedEx. I'm making a note for myself to check FedEx at the open too, okay? And now we just reached 922. So I can tell you now that if I was to load any symbol on the option chain, everything would be zero out. So I cannot work with the option chain at this moment in time. And therefore, what I'm going to do is I'm going to switch trading mode from non-directional, and now I'm going to start focusing on the directional trades, long first and then short, okay? And I'm going to be looking at those ones, okay? Because directional trades imply more work with the charts, okay? So let's go ahead one at a time. It's not too many, so I guess we can just look at it one at a time. Looking at your comments, questions here, guys. Yeah. I think it's all good. Pansy, how are you? Good to see your message. Good to see you. Okay, so what do we have with this particular market? Well, the last candle we see is a non-confirmed climate, but again, the scanner is more intelligent than that. So as CVNA opens, it's gonna be in an up climate. Okay, that's why it's an opportunity to buy. Okay, and what we need to see is that we need to assess those UFOs. Okay, so with pre and post market, we got 34. That's not enough. Now, because we're going to be directional now, we are not looking for 48%. As you probably remember, we are looking for at least 50%. Less than that, we will not do it. And notice that this one is providing 49. Okay, so we're just going to pass. There is not much institutional interest in that stock, so then we will not have much interest either. So loading exact science, okay, and we're looking at the climate. We are 5 candles into this climate. This climate is supposed to last by 7, so it's certainly an okay time to enter the trade. So bottom line is going to be about the UFOs, so we need to wait for the pending data to be completed so we can see if that's fine or not. So yes, we got 54%. This is valid. And if I switch to pre and post market, we have 45. So 45 is no good. We would use a regular session, and I do have a problem. Some of you are anticipating me, isn't it? So 83.6 is somewhere around here, and we got no UFO. So even though we do have a proper climate, we don't have supporting on-field orders to give us a trade. Okay, so $16 stock, $27 stock. If that's okay, I will skip them. MDCO, that one is a little bit higher price point. Oh yes, I remember we saw that one the other day. Yeah, we're gonna have to pass on this one, isn't it? Because when you look at the climate, we have been 15 candles into a climate that based on stats should be 7. So this market is certainly way too extended. So MO, okay, we are looking at Altria Group. So let's see what we have here. Yeah, same problem. We are dealing with a climate that has been out there for 13 candles where statistics suggest 5. So very, very extended market. CS, SeaWorld Entertainment. Let's go ahead and see what we have here. So from a climate point of view, we are fine. 2 candles out of 7. Certainly a good time to enter this market, but we need to see the probabilities of those UFOs. We also need to see the location of the UFOs. So we just need to wait a few seconds for the pending data to be with us. Here we go. 49.71, that's not good. Moving to pre-post market, it's 48. So still not good enough because there is no enough institutional interest for that stock. So SPLK, let's go for it. Okay, so what do we have from a climate point of view? 15 candles out of 7, too late to the party. So we move to Tiffany's. Okay, Tiffany's, where Tiffany's is showing us a climate of 12 candles, where statistics suggest it should be 6, but it's already 12, it doubled it. So certainly too extended as a market, no need to wait for the pending data, we're done with that. Under Armour, we planned a trade on that stock the other day, isn't it? Yeah, am I in this trade? Because I remember placing the order, but I'm not sure if I got filled. No, I am not in the trade. So I guess I placed the order with day only, and then I didn't go back to check. Okay, so I never got into this trade. Anyone out there is in the Under Armour trade, because we did plan this one the other day, and it seems to be working according per plan if memory is fine on my end. 4 candles out of 61, out of 5.61, which is 6, is what we are given by AutoClimate. So certainly still a good time to re-enter Under Armour. Just a little bit of a low price point stock. Okay, so not super delighted. I believe the other day I was making this comment, so I'll repeat it, which is if you are new to options trading and you are kind of transitioning between paper money demo trading into real world trading with real capital, this type of stocks, it could be a good candidate because they are very low cost, if you wish, and therefore the options end up being quite cheap as well. Okay, guys, and just out of confirmation, would you mind to just type anything on the chat box, because again I'm getting nothing on the chat, and I want to make sure that it's just because you are following instead of because I got disconnected from the chat like it happened to me earlier. So please go ahead and type anything just so I know you are there and we are well connected and everything is fine. So when looking at Under Armour, we are having a probability of 53% with pre-post market. The current value for the average is 1874, and 1874 it's unfortunately below that UFO. So we don't have a setup that matches our rule just as of yet, even though when the market opens, I believe we may have another opportunity to re-enter Under Armour, because when the market opens, the average will likely be a little higher. And if the average is a little higher, now we are likely going to have a confluence with that UFO, and then we'll go for it. Okay, so let's check again once the market opens. I just made a note for myself. That's going to be 1 minute from now. So Yandex, YNDX, let's see what we got. All okay, very good. Thanks for that, guys. Appreciate it. Very good. Yeah, so with Yandex, again, you can see a non-confirmed climate, but when the market opens in less than a minute, we're going to have a blue dot. The scanner is already doing this job for us. So the question now is, what about those UFOs? Okay, with pre-post market data, we got 42%. If we look at regular session, We got 48, so it's not good. And therefore, the last stock we're gonna check for directional purposes is gonna be Zillow Group, which is currently trading in a climate that has been lasting for 6 candles, where stats suggested it would be 6. Actually, today's candle is going to be candle number 7. As you can see, the number just changed to 7. Okay, and therefore, if you were to take this trade, assuming the setup is good, then you would need to go with half of the size to diminish your risk. Of course, that's an optional risk management rule, but I guess it makes sense to you, isn't it? Probabilities are less on your side, still okay, but less on your side. So let's use less capital. Okay, so that's how I normally approach it. So 50% is what we get with regular session. For Zillow Group, pre and post market give us 42, no good. So regular session is the way to go. And at that time, the average would be 40.81, which certainly coincides with this UFO. So my friends, we do have a trade here. And therefore, I'm gonna complete the plan for the Zillow trade by first looking at a target. So using the daily time frame, which is my common time frame, I am turning on AutoUFOs, okay? Notice how the current price is already inside of a UFO. So when that's the case, we go for the next one for the target, okay? So the next one for the target for Zillow Group would be 48.5. 48.5, that would be the target for that stock. And therefore, now we're gonna put an options play around that to profit from that move, assuming we're gonna be right in the direction, which is what climate and UFOs suggest, okay? So let's go for it, okay? In planning this trade, the first thing that we're gonna have to do is to calculate the time to target, because we're gonna have to look at options, and I'm gonna have to pick expiration date, and the expiration date depends on the time to target. So if 48.5 is the target, and the entry is gonna be those green UFOs, okay, which the top green UFO, they are overlapping each other, so I'm picking the one on the top is 41.12, okay, so from 48.5 to 41.12, we're talking about catching a $7.38 move on a $40 stock. That is actually a very nice one. So what we're gonna do is to turn on average true range. Okay, we can see here that we got 1.14 is the average true range in a daily basis. So 7.38, which is the amount of room we plan to travel, divided by 1.14, which is the daily ATR, tells you that the target is 6.4 ATRs away. And assuming our normal assumption, which is that will take 1 full week to net a 1 daily ATR, so I multiply this times 7 because we got 7 days per week, and that's gonna imply that we are expecting to be in this trade for 45 days. If everything works well, it should take 45 days to reach our target. That's the assumption, okay? With this assumption in mind, okay, we also need to look at earnings because we want to use expiration dates that line up with the earnings. This normally helps a lot when it comes to diminishing the problem of time decay. And in this case, we have a problem here because it doesn't show anything when it comes to earnings. Okay, so in order for me to not waste time, I would like to require a little bit of teamwork here. I can see some of you out there are TOS users, Thinkorswim. So please, would you mind just to use a different platform that is not mine? Would you mind to check on the earning date for, oh, look at that, Dirk already did it. It's amazing. I so love it. Thank you so much, Dirk. That's so appreciated, my friend. You're the best. So February 6th for Zillow, okay, notice sometimes when using free websites, this thing will happen where you don't have the information. So then you don't want to close your eyes. You certainly want to look for another source of information to find that data, okay? Thanks for that, dear. Sorry for that. I just needed a little sip. So anyway, so what are we going to do? Well, I'm going to load Z for Zillow. I'm going to check the option chain to see all the options, all the expiration dates available. If I look at the one in February, which would have the earnings built in, okay, because the one in January expires prior to earnings, so February would be the one providing that feature. Notice how that one provides 72 days to expiration, which is more than the 45 days we calculated we need. Therefore, it's perfect using February 21st, 2020. It's the expiration date that we're going to use for this trade because it gives us time to get to the target, plus produces some offset to overcome and fight the time decay element when buying options. Okay, so we're going to be selling calls, and that's going to be beyond. Let me write it down for you guys. Beyond the target. Okay, remember the target we said was 48.5, so we're gonna have to sell a call beyond that, and then we're gonna have to buy a call, okay, somewhere between entry and target. Okay, that's where the call will be. This again will be using February 2020 expiration date, knowing that earnings, okay, are on February 6th. And by the way, these may change. Remember, you always need to keep reviewing earnings. Okay, and being that the case, make sure you are out on before February 6th, no matter what. Even if you didn't reach the target, be out before February 6th, because you may have a gap against you because of earnings. Okay, so the fact that we use a date after the earnings doesn't mean you're gonna stay through earnings. You need to be out prior to earnings. Okay. Cool. Okay, so which one are we going to use? Well, above 48.5, we have 50. Okay, that's the call we have. We got the 50. Okay, so let's go for the 50. Okay, we're going to sell the 50 call. Okay, and then between entry and target, well, then I'm not sure. I need to use the power of my options analytics platform to be able to find out which is the call that, combined with the 50 call, gives me the delta I need, which you probably remember the delta we need, the delta we're looking for is a delta of around 30. Okay, now not 30 now, 30 at entry, and we said entry was going to be 41.12, right? Just like we said the target was going to be 48.5, okay, the entry it's 41.12. Okay, that's what we got. So now I am, as I said, selling the 50 call. Notice sell, red color, -1, that's sell. So we are selling the 50 call, we are buying the 45. When looking at delta, this gives you too little delta. We are being provided with 15 delta, which is less than what we need, than what we want. Okay, so what we're gonna do is I just need to look at the option chain to see what we have available. It's $5 strike price increments. Okay, so when looking at the chart, if this is 50, this is 45, then I need to go to 40, and 40 happens to be below, okay, below my entry instead of above my entry. Okay, it's not between entry and target, it's actually below the entry. So therefore I cannot lower 45 to 40. Okay, I cannot lower my 45 to 40. Therefore, the only way to get more delta, if I cannot lower the 45, is then to raise the 50 to a greater number. So the next one is going to be 55. So let's go for 55 and see what happens. And the moment I do that, now I am getting with deltas of 26. Okay. Now, again, one thing I want to say here too is that it's going to be difficult to adjust this trade, given the fact that the strike price increments are $5 at a time in a stock that is only $42 per share, meaning that this may not be the best option chain in the world, even though it's providing what we need. So we're going to try to adjust this the best we can. We just wish we had $2.5 strike price increments, or ideally $1 strike price increments, but I guess that stock is not liquid enough for market makers to release such strikes. Okay, so we have to deal with $5 strike price increments. Okay, so let me try and see what happens if I move it to 60. So if I move it to 60, I get 32. Okay, and I like this. Okay, and I'm not sure this is gonna be the way to go, but I will say I like this because if I was to use the 55, first I didn't get the 30 I want, and you could say 26 is close enough given the fact that strike price increments are $5 at a time, and I won't be able to be as precise So you would say, okay, that's close enough. Okay, and I would take it. I'm okay with that. Also, what I'm looking, with the side of my eye is that gamma is positive at entry, which that's a normal thing. But also gamma is positive when I get to my target, which is something that I really love because it gives you a much more intense dynamic leverage and performance on the trade. So certainly I want that. But notice what happened the moment I went to 60. That gamma 2 and 0 went to gamma 2.8 and gamma 0.7. While instead of 26, I got 32.7, which is still around 70. Okay. So again, I am enjoying a gamma, let's call it about the same, but I am now benefiting from a greater gamma value when I get to my target, which is will produce more and more and more performance in a more efficient way as I travel towards my target. So I like this one. My only concern, I'm not sure if we're gonna have liquidity on the 60. Okay, it may be way too far to get liquidity, so I need to check that. We got 45 and 15. So being lucky, you may be able to sell it for 30 cents. It's just very far. Okay, so let's do an experiment. Let's compare two trades, and you guys tell me what you like most. Okay, so I'm just gonna enter as a single trade, just buying the 45 call. Okay, so compare. Okay, on the top, okay, I got the vertical spread. You're doing 45.55. On the bottom, I only got the 45, meaning that I will not be selling the 55. I only got the 45, okay? And by the way, I need to uncheck everything so we can do a proper comparison, okay? So everything is unchecked, okay? Now, let's begin. Cost of the trade, first of all. Well, right now, the 45 call cost you 262. If you do the spread, it's 233. So yes, of course, the spread cost you a little less, so you have less to lose. Instead of maximum loss 262, maximum loss is 233. Okay, but by the way, this is now. Okay, this is now. This is not at entry. At entry is gonna be everything a little less. But my point is that even now we can see it's about the same. There is not a big difference. Okay, so now what if I do the vertical? Well, if I do the vertical, I just check it. Okay, the expected cost for the trade is right here. It's $203. Okay, instead of 233, which is now, it's gonna drop by $30 and it's gonna be around $200. $200, okay, in order to get that 32 delta with positive gamma and positive gamma. Okay, that's certainly a valid trade to take. If you take this trade, I'm not gonna say it's wrong. But what if we look at the other one, which is only buying the call? So notice now I unchecked the one at the top, I checked the one below. So what is the outcome? Well, now the trade is gonna be 227 instead of 202. So in other words, I got $25 difference if I was to do this trade. Okay, the most I can lose if I do the spread is 202. The most I can lose if I do the single call is 227. And the difference is that instead of 32, I got 39 delta. But this is my decisor element, gamma. I got 4 and 3 instead of 2 point something and 0 point something. Way more performance. And of course, some of you may say, yeah, but you get hurt on theta more efficiently. Of course you do. But again, you are assuming here that the stock is going to move your way, because if it's not going to move your way, you're going to lose 227 anyway, which is again only $25 more compared to 202. So I will say the trade that makes the most sense for me is just to go simple one, buy a call on Zillow Group. If the stock, which is currently trading at 41.90, falls and falls and falls and falls and falls and falls and get to 41.12, buy the call, which is going to cost you around 232, and that's your risk. So make sure you keep that in mind when deciding how many calls you buy, because one call makes your risk 232, but 2 calls makes your risk double, and 3 calls triple. Okay, and so on. So, but anyway, when the stock would come to this price level, that's when you will buy the call, expecting it to go up towards 48.5, and then you will make a profit of kind of like the difference of these values. Okay, 600 minus 200, that's $400. So you will be risking 200 plus bucks to make 400. It's kind of like a 200% return, something like that. So it's certainly a valid trade to be executed, and therefore I'm just gonna go ahead and place an order. So I am placing an order, a market price. I'm gonna make it day order, okay? And I'm gonna use an activation rule to buy this call. This is an order to buy, as you can see, and we're gonna buy a call, as you can see, okay? But I'm gonna do it with an activation rule where the only time this order gets actually sent into the market as active is when the price of the stock is less or equal, less than, or let me say that again, equal to or less than 41.12. Okay, so if that was to be the case, then I will want this order to be active, and therefore I am now entering this trade here. As you can see, we have the summary where we have the activation rule right here, which is gonna purchase our call, but only if this condition is met. Okay, in other words, once Zillow falls into the green UFO that lines up with the average in the context of the climate, then we're gonna buy. Only then we're gonna buy. Okay, and you can see I got my order here, received the 45 call on Zillow that expire in 2020 February 21st. Okay, so my trade is in. I guess that some of you were working on your end as well to implement this trade in your accounts, real or simulated. Of course, you decide that, as well as the size of the trade, but that would be the plan. So I got the trade in. That is it. Okay. So any questions? Go ahead. Dirk, but the theta is much higher on the single leg spread. Yes, you are correct. You are absolutely correct, Dirk. But when you say the theta is much higher, the worst case, the worst case for theta to hurt you is to give you $25 extra of pain, which is the difference between the price of the long call versus the bull call spread. So that's how much theta, how much additional theta you may feel pain from. Is that making sense? And to me, that was worth it, given the 3 point something gamma that you still got at target. Okay, and certainly this even allows you to do some dynamic hedge, shorting stock against the call and stuff like that, as we covered in other sessions. So I would certainly see that trade as valid. The other trade here, if it's your preference to reduce theta, and this is the way you trade, and this is part of your rule set, which makes a lot of sense, the other trade doing the spread would also make sense. So you can certainly do that too. Okay. Okay, good. So, hey, I said I would quickly look at Under Armour. So I just want to have a quick, super fast look before we get back into non-directional trades. So what do we have here? So average 1883, it's about the same as the other day. Actually, no, it's better. It's higher. Yeah. So 1883 is actually here. Yeah. So actually, we do have an entry, a valid entry with Under Armour. Again, I'm going to do this at the speed of the light, if you don't mind, because we had a trade that was copy paste the other day. So just to give you instructions so you can complete the plan yourself. Okay. We only got 30 minutes, and that way I can devote that time for non-directional. But basically for Under Armour, you have a target, okay, that if you were to use that one, it would be 2284. That would be your target. Okay. Under Armour, 2284, that is the target. I'm just going to giving you a few more seconds for you to make a note. Again, one more time, 2284, that is the target for Under Armour. Knowing that your target is there, knowing that the climate is favorable to the trade 5 out of 6, okay, and knowing that the average is 1883 and you got overlapping UFOs here, okay, so the top of this UFO, okay, which is 1909, this would be your entry point into the trade. So currently Under Armour is trading at 1919. If Under Armour drops by 10 cents to 09, then that qualifies as a valid entry per our rules, and therefore you can enter this trade with the right option strategy with a target located at 22.84. Okay, so that's the trade. I will not repeat the options plan because it's kind of copy paste of what I just did, and also I did a trade on this stock the other day. So I think it would be more efficient for the group that I switch to non-directional trades. Okay. Got it. So anyway, so non-directional trades. I said I would start looking at McDonald's. Okay, so let's go ahead and look at McDonald's. Let's see if premium has increased. Remember, we had a concern with the premium with McDonald's. So where is that stock? So the stock is 006 higher. It's not a lot. So I'm not sure 202.5 call. That's the one we're looking for, right? Okay, yeah, 202.5 call. That's the one we're looking for. So not sure how much I'm gonna get paid for that. 202.5 call. It's paying. Sorry, we were using December 27. I remember now. December 27. It is paying 27 cents. This is 1 cent more than earlier, and the bottom part it's 40, which is paying 2 cents less than earlier. So yeah, we cannot force it. It's not gonna work with McDonald's, and it's a shame. It's just a little bit, maybe we're gonna have elections in the UK and things that are impactful out there in the world, and maybe there is a little bit of spice kicking in, and we have a spike on the VIX, tomorrow or the day after, so something to watch for sure. Where is the VIX right now? Let's take a look. So the VIX is currently trading at 15. Okay, so if we were to have a spike on the VIX, reaching to those 18 levels, from there it's likely to fall again. But if it was to reach to 18 levels, now you look at McDonald's and you may get paid enough. So keep that in mind. The scanner will pick the opportunity for you as well. But again, I'm just making you aware that could happen, giving uncertainty out there in the world. Okay, so what else do we have? We have Honeywell that has been moving up 0.65. So now if you were to calculate the vertical distance from here to here and the vertical distance from here to here, it's not exactly equal distance. You're a little bit in the bottom part of the range. Okay, you don't need to be exactly in the middle. Okay, but certainly this is not an ideal setup. Okay, still I'm gonna look at what's available out there on the options. Earlier I checked the earnings, but I forgot, so I'm gonna check again. HON. Okay, so HON, we are dealing with January 30. Okay, January 30. So if I look at December 20 and I right click to analyze and sell an iron condor, I look at my analysis tab and I switch this to +1 and -1 standard deviation. This is telling me 170, 180.5. So 180.5, okay, it's somewhere here. And therefore I could certainly be shooting for the 182. Okay, so let's see what do we have with the 182. So that would be 182.5. That one doesn't pay enough. So I would need to use December 27. 182, that one pays 18. That's not enough. So I would need to use the one into the new year. 182, that is 38. That would pay enough. Okay, so the question is, if I use January 3, what is the range now? So January 3 gives a range up to 182.25. And I am shooting for 181.70, which does not work. Okay, does not work. So no Honeywell. And then we were looking at FedEx too. I said we would go back to look at FedEx. Okay, so let's see what's going on with FedEx. Yeah, so FedEx is doing the opposite of what I need, which is it went higher in the range. I wanted FedEx to be a little bit closer to the midpoint. And we were going to use their December 13 because of the earning date, isn't it? But unfortunately, it went away from the midpoint and is actually already filling orders from one of the UFOs. And remember, the rule is that we always need to have at least two. Okay, so out of curiosity, I'm going to look at the 166.5 if that was to exist with FedEx. Okay, and again, I don't want to be overconfident with memory, so I want to double check again one more time. Earning date, I think it was December something. Yeah, December 18, here we go. So then we will need to use December 13, and if we were to sell 167.5, we only get paid 2 cents, so that's just not gonna work. Okay, so we are back to the list and just working normally on the list. This was my catch up from before the break. Okay, and the next one we're gonna check is ADI. The last stock. Oh, actually, I just skipped Costco. Let's go ahead and check Costco first. Okay, Costco. So Yeah, December 12th. So we cannot do anything with Costco because the next expiration date is 13, which is after 12. Okay, so ADI. Okay, we're going for ADI. So what do we have here? So the climate is 5 out of 8. So that's good. 5 out of 8. That is good. We are looking for UFOs. So 46%. That is not good enough. What if we switch for pre-post market? That becomes 36, which is worse. So that market has no institutional interest, and therefore we're gonna pass. And then we're gonna continue with the list. Continue with the list. Here we go. So, oh, look, I just skipped that one. I didn't realize Shopify. It's a mistake on my end. So SHOP. Okay, so Shopify earning date February 10. So that gives us plenty of time to do things. So the key will be the UFOs. We got 54%. That sounds good to me. What about a pre and post market? Instead of 54, we now get also 54. So 54, 42. And let me do this. I'm just gonna, because it's both 54 kind of. So I'm just gonna draw lines where those two UFOs are out of our reference, 54, 42. And if I go back to a regular session, 54.42 becomes 54.39. So it's about the same. And yeah, and basically we are dealing with the same UFOs. Okay, so nice one. Thank you very much, AutoUFOs, for helping us with that objectivity. So 397, 337, that is the range. And therefore, what I'm going to do with Shopify, it's to insert its symbol on the chain to be able to project the range from a statistical point of view. Let's see if we can have this trade working. I am a little, let's call it more excited with this one given the price of the stock. So we may be able to have a setup where it works. Okay, so I'm just gonna go ahead and right click. By the way, notice I'm using December 13. Okay, that's the beauty as well of using stocks of a very high price point. This one is like $300+, so you can go very short term and sometimes it works. Okay, so we'll see. So stats suggest that minus 1 standard deviation and plus 1 standard deviation is 350 and 385. So 350 it's somewhere here. So certainly 337 is lower. 355 is way below 397. So yes, that's fine. We are more or less in the middle of the range, slightly to the upside. We have 2 UFOs above to defend ourselves, 2 UFOs below to defend ourselves. So the trade certainly is valid from a setup point of view. Now we need to look into the options to see if we get paid enough or not. Because here the trade would be an iron condor. So we would buy calls above. We would sell calls below the calls we sold. We will be using in this first attempt December 13, 2019 expiration. We know earnings are on Feb, so we don't have any concern, even though we always need to keep reviewing that because it may change. We will be selling puts below, and we will be buying puts below the puts we sold. Okay, so which ones do we want to sell above? So I mean, if we had 397.5, that would be great. Probably what we have on the chain is 400. Let's take a look. So what do we have on the chain? We actually have the sim. I think we may have the 397.5. Yes, we do. So the 397.5 pay us 55 cents. That is more, and now it's 68. That is certainly more than the minimum 35 we need. Okay? So that's a good beginning. So I'm going to do 397.5 and 400 above. 397.5. And the bottom part, I'm looking at 337.5. Not sure if that one would exist or not. Okay, 337.5. So let's go take a look. 337.5, which does exist. And that one paid 30. which is less than 35, okay, it's less than 35, but if you were to add 30 plus 70, that is $1 of premium collected, which is over 35 times 2, which is 70, isn't it? So therefore, this is one of those exceptions where I'd be happy making an exception with the put side, selling the 337.5. Okay, so we're gonna be using 337.5 and 335. Now, here is the real test. Now we're gonna see if this iron condor meets our remaining rules when it comes to risk. Okay, so I'm just gonna adjust first the put side. We said 335, 337.5, and the call side we said 400. Not that one. 400 and 397.5. Okay, so if we were to do this trade, it would not work. Okay, and here's why. We have rules that suggest that we need to take at least minimum 15% of the difference between strikes that represents our risk. Okay, 15% of our risk is what we need to take, and our risk is how much? 2.5. 2.5 is the difference between strikes. Okay, the difference, the 15% of 2.5 is 37.5, and notice how this trade would only pay 22. So what happens with this trade? What's the problem? Well, the problem is that we are getting too little premium given the size of the range. Okay, so we may be able to fix it by going for the next expiration date. Okay, and if we were to go for the next expiration date, the first thing I need to do is to double check changing the date here on the analysis tab. I need to make sure that my range is still between the UFOs, and unfortunately it's not the case. 402, 342 does not fall in the range anymore. 343 is indeed above 337, but 400 plus is indeed above 397, and there is no more UFOs here. If there were UFOs, then yes, I would have no problem to move the proper line higher and sell higher calls, but I don't have UFOs here, and therefore I cannot do it. Okay, so Shopify is not meeting this trade at this moment in time. What may happen though, watch it guys, watch it, because during the context of today, you could see that stock fall a little bit. And if that stock falls a little bit and is a little bit more in the middle of the range, now statistically speaking, the probabilities are still fine here, but now you will get more premium on the put side while you still get decent premium on the call side. And now you may get a much better setup still using December 13. So watch it, because it may work later in the day, but certainly not now. We are not passing the risk test. Anyway, everybody, so we just reached the top of the hour. How did it go, everyone? Little feedback there. How did it go? Did I go too fast, too slow, just right? I accept critiques, because you need to give me your feedback so I can support you better. Certainly these sessions are designed to be somehow fast-paced, because we got 1 hour to find trades, and these are not the sharpening sessions that we do over the weekend when the market is closed. These are the sessions that we do when the market is open, but if I was to go too fast, certainly I need to know. Okay, so little feedback would be welcome, and certainly looking forward to see you next week. So looking at the feedback, it seems that all is good. Yeah, very nice. So if all is good, then I'm very happy. Perfect, everybody. You guys take care, keep up the good work, and I will see you soon. I believe I'll see you on Sunday over the weekend. We have sharpening this week. See you then. Bye bye, everyone.